were so many amazing conversations going on. I wish I could have been in every single one of them. They all look like so much fun and so intense. Very cool. So welcome back for the afternoon. I'm really pleased to introduce Julie Verhage, who's a senior reporter from Bloomberg who covers startups and fintech, and she's going to lead this panel discussion on alternative data. So, Julie, thank you.
Hey, thank you for having us. Make sure this is all good. So thank you guys. Yeah, like she said, I cover fintech for Bloomberg, so it's everything from PayPal, a public company that I cover, and then a lot of startups that are out there, everything from cryptocurrencies to lending, and something that is common across not only fintech, but pretty much all areas of our lives now is that data is a very big thing, the ways that we use it, how much of it we can find, et cetera. So I'm really excited to be here with these panelists today. We've got Nick Wood of Adapar, we've got Alex Picos of PayPal, we've got Derlin Chu of Quovo, and we've got Alyssa DiCaprio of R3. And while some of those names might be familiar to you, I'm going to have each one of them just give a minute of what their companies do, just so we have that good basic understanding before we go into this, because we do have 45 minutes together. So we'll start on that far end there.
Wonderful. As Julie said, Alex Picos, I lead within PayPal a unit focused on data governance and regulatory technology. Of course, PayPal is focused in payments in the fintech space around the world, and very excited to be here.
I'm going to take this out. It's a little easier. My name is Derlin Chu. I lead the product lead for the aggregation platform at Quovo. We are a data platform that delivers aggregated data as well as insights and analytics on top of that.
All right, my name is Nick. Currently head of product at a company called Trident, but I've been at several years at Adapar. Adapar aggregates data at scale from banks, all types of investment transactions, and brings them together so that family offices and wealth advisors can understand returns and understand their portfolios.
Cool. And I'm Alyssa DiCaprio from R3. I'm the global head of research and trade. And what R3 is a company that builds and maintains the platform Corda, which is a blockchain platform. We don't do cryptocurrencies. It's solely the technology. Our partners build the applications. We started in the financial sector, and we've expanded out into many other areas, including supply chain and different areas like that.
Got it. So like I said earlier, there's a lot of ways for data to be used these days. Just over the past 2 years even, there's been such a change in what companies can find out about us, how they can use that, how retail is changing, how finance is changing. I'd love you guys to talk about just how that change has impacted your roles at your jobs. And I mean, some of your jobs almost couldn't have existed 10 years ago, right? Because you all use data so much, and that is your job essentially. So maybe we start with Alyssa.
Sure. So I mean, blockchain effectively is a very different way of managing data exchange. That's all it is. So I mean, I think to your point, the job itself didn't exist until blockchain existed, because it's really about how do you manage and exchange data and make sure that the different parties have the same data and have the same understanding of what is in those different documents.
Got it. Nick?
Yeah, I'll talk a little bit. So what's interesting is that there was a couple of the talks about academic studies earlier today. And you'll notice a lot of economic studies around investing are all based around, this is the S&P 500 for the past 50 years, right? No, there isn't actually a lot of data around what's in real people's portfolios, especially once you get outside of things like stocks and bonds. And at Adapar, we were bringing together data on not just stocks and bonds, but people investing in private equity, in hedge funds, in art, in vintage cars. It was a data set that really didn't exist until Adapar started bringing all that data together and applying things like graph databases and the financial graph to it. So it really gave us a different kind of insight into the way that wealth advisors and family offices think and the way that investing is actually done out there in the real world. So that was, the insights that come from that are just super interesting.
Got it. Derlin?
Yeah, I think for us, it's a little bit different because we are an infrastructural company and we're actually one of the providers of data. So I think the way it's impacted us has been much more just a realization in the market of how vital having multiple sources of data and getting to know your client better has been. So, as an example, Adapar was actually a partnership with us. They use our investment data that's sourced from clients that want to help their financial advisors get a better idea of what their entire picture looks like, so that when they're advising on a portfolio allocation, they know, oh, you also have this TD Ameritrade account or whatever it is that is completely in ETFs. You should probably tell me that. So, I think for us, it's been much more on the demand side and a growing understanding that this is not just another feature, it's becoming something that is critical to running a business, whether it's financial services, traditional financial services, or other fintech applications.
Okay. Alex?
I think in PayPal is a fascinating journey. Some of our more tenured employees go back to the times in which the company was launched and this new thing, the internet, is it secure or not to use my credit card? So from that focus, adamant focus in making people feel secure in financial transactions, now we have this massive proliferation and accelerated rate of interactions in commerce in different kinds, contextual commerce, mobile commerce, and by the way, everybody understanding how the ecosystem is changing, and with new demands, both on the customer side, regulatory side. So very, very exciting, increasing complexity. It's truly a journey.
Got it. I didn't even plan this, but you led me right into my next question. Is that something that has to go hand in hand with us giving up our data to someone else is trust, knowing that it's going to be secure and I'm going to get enough value on the other side that I don't mind you knowing about that, whether it be giving Apple my fitness activity or giving PayPal credit cards that I'm storing in there. So how do each of your companies just go through and make sure that that trust is always there and it's never breached? Because that could essentially, that changes a lot in your company if all of a sudden a bunch of credit cards are stolen and I'm not quite sure I want to go use PayPal or Quovo or whoever it is anymore. So I don't know, maybe, Nick, you start us off?
Yeah, I mean, that data security is absolutely essential. It's interesting how in finance especially, trust is one of the most important things, as you brought up. And once that trust is valuated, it's extremely hard to earn back. And so, I mean, I think I was talking to Adam about this earlier, but within these companies, you have to create a sense of how important that data is, protecting it, making sure you use the best types of encryption, but also creating processes and fail-safe systems so that even if somebody makes a mistake or somebody fat fingers something, there's layers behind that can protect against accidents and breaches and sorts of things. And actually, it was interesting at Adapar, we had a major security team, and they actually did a lot of interesting things like trying to break in from the outside as well as shoring things up on the inside. There's lots of things you can do from a technical standpoint that help you safeguard data and looking at traffic, understanding what people are doing, and making that sort of embedded in the culture and embedded in the software from the start. I don't know, Adam, you had a lot of good thoughts on that.
Yeah, that is exactly right. A lot of it actually is designing for that. So sometimes compartmentalizing the data doesn't look like the best idea from a performance perspective, but it's something necessary. So we just need to make sure that the precise use cases, the precise audiences and individuals, will have only access to the data for what is permission. And by the way, build fail-safe mechanisms around that, trust but verify, and build that into multiple layers. And being very, very attentive because, again, the next technological development, the next acquisition, the next product launch, constantly you need to be on the watch for patterns. Also very exciting part is anticipation. So you don't want to do things after the fact. You want to go before the fact as much as you can. So being able to understand what people are even planning to do and then making sure that you design for that very early on and you introduce those controls ex ante is a very important part of the journey.
Right, and if anyone gets the chance, PayPal has this little walkthrough tour at their Tribeca office where there's one piece of it where they sort of show you different examples of how important the fraud protection stuff is on the other side, and it's actually pretty fascinating to go through. So, Derlin, you want to add to that?
Yeah, I mean, I don't think there's much different than these two guys in terms of attention to security and just ensuring that any data that we're trusted with in partnership with clients, does not see any unauthorized use or anything like that. So, that would certainly be very impactful to our business, and it's something that we hold in very high regard in terms of making sure that we have the highest security protocols to make sure that data is used properly by our clients and only our clients. But I think the thing that I think it speaks more to is that I feel like there's a growing realization maybe on the consumer side of how much personal data is out there, whether it happens to be financial or health data or just anything out there related to your social profile. And we have new examples of unfortunate losses of that data almost every day now. So I think it's kind of a watershed moment happening right now of a growing consumer awareness as well as a regulatory awareness of something needing to be done about that, which is probably the bigger concern I would think around our types of companies.
Well, if I could actually add to that, this is the whole reason you use blockchain, right? Is because when you have centralization of data, you do have that central point of failure, and you do have to continually verify. And there's mistakes, right? I mean, I come out of the financial industry. We were doing trade finance, and trade finance is the worst because you're constantly checking documents, and you're constantly taking someone else's documents and putting them into your own system, and maybe you mess that up, and then once it goes through the process, then the whole process stops. We have to go back and verify and check again. So this is very difficult, and it's not efficient at all. But with blockchain, what you're trying to do is you're decentralizing the system. So rather than you putting in a document, I'm putting in the same information. We're both verifying that we're seeing exactly the same information. And there's no central point of failure where it could be hacked. I mean, there's ways that you can hack blockchain, of course. I'm not saying it's magic. But it's a lot more difficult than the central point of failure, which we have today, particularly in finance.
Yeah, no, I mean, is that part of the reason that, R3 and a lot of others have sort of taken finance as, the first crack with blockchain? Because obviously other industries can also benefit from having some sort of distributed ledger system, but it seems like finance has a lot to gain from using this.
Oh, yeah, absolutely. I mean, because everybody thinks blockchain does everything, which it doesn't, right? There was actually a really interesting study where this has nothing to do with trade or finance, but it's useful, I promise. So it was about smart cities. And there was this survey of people in an urban area, and they said, okay, do you think blockchain can solve all the problems of urban areas? And 77% of them said, yes, absolutely. And then they asked the second question, which is, can you identify the specific case, the specific way that blockchain is going to do this? Only 12% of them could actually do that. And so so first, that exemplifies the fact that blockchain is seen as a solution. It's not always a solution. But second, blockchain is a data solution. It's not a physical problem solution. And when you think about urban issues, these are things like trash collection, it doesn't get collected often enough, there's too much traffic. Blockchain's not going to solve that. So it's really where there's a lot of data exchange, where there's multiple parties that need to oversee the same data, that need to change that data as it goes through the life cycle of the trade, and that need to continue to verify it.
Got it. So, I mean, you bring up a good point in that there's a lot of misconceptions around blockchain, how data is used. What are different ways that you guys are making sure that people understand, hey, this is what you're sharing with us, this is how we're using it, and this is the benefit you're going to get from partnering with us or letting us have that information? I don't know who wants to kick us off, maybe Alex, Dan?
I think from the onset, advancing in permissioning technology, and more we go into a world in which data gets permission for very specific use cases, by the way, just for a very brief time. So, and I think this is where all of this will go. With contextual commerce, basically, yes, you can use my data to optimize my experience, but for this particular case. And then starting to massively design all of our verification systems, leveraging blockchain where applicable, around that paradigm, for us, that's the game changer and the way we think about the future.
Yeah.
I mean, for us, the use case is clear. Advisors make the pitch to their clients that, if I can see your whole portfolio in one place, I can make better financial decisions and help you in X, Y, Z way. And, our process is all these banks that have the financial transactions of their clients, the clients own that data. So yeah, we actually have a whole process of, signing a letter saying, for this specific use case, for this data, yes, provide this data to Addepar, and for the point that the advisor will be able to use it. So there's a lot of I guess in the case of financial data, in our case, there's a lot more intent. They have to sign a piece of paper that says, yes, this data goes through. And it's very much for a very specific reason and for a specific use case. And I think that helps provide a little bit more trustworthiness to the way that it's done.
Got it.
Yeah, I think just to add on to that, it all goes back to consent. For us, every end user that we have is working in partnership with us, and they have the right at any time to revoke that data right from us, and that disappears from our servers. That's just part of our agreement with them and our license of the services that we actually provide. And I think we as an organization very much are in favor of things like Dodd-Frank and the implications of that, of consumers owning their data, consumers using it for giving out use to it for specific things, and then being able to revoke that. And just it's more about understanding who is using your data and for what.
Got it. Did any of you guys see, I mean, obviously one of the biggest events in data this year was when Facebook had all their issues around Cambridge Analytica. Did that impact your businesses at all, or did your customers and people that were using you still have that sense of trust since you weren't Facebook? It felt more like a one company event.
That's why people have blockchain.
I would say that every time that there is an event, a systemic event in a major company, this is a major learning moment and a major learning opportunity. So we all basically gather around, we partner, we're in this together, the legitimate ecosystem, understanding what happened and marshalling around it. And an important part of it is being extremely transparent about it and explaining to our customers, what happened in that case, that could be further away or closer to home, and what is going to be done around it. Transparency is paramount, very important, and communication, between the lead players, is the way to go. We cannot deny that there is a powerful ecosystem that also is constantly attacking e-commerce. They also interact, they also use tools, they also use AI, and they leverage, everything, under the sun to be able to make a dent. And they talk they interact between them. So it's very important that we, call it out and that we organize ourselves in ways in which we produce, concerted action, and we team up and we partner on those.
Got it. Derlin, anything to add?
No.
They've said a lot so far. So just since we've talked about blockchain a lot, how are you guys using blockchain to sort of avoid some of these pitfalls? I know PayPal's exploring it a little bit. Other companies obviously looking at it too.
Yes. When it comes to blockchain, I mean, the power of the ledger, as it was very well explained, is basically unbelievable. There is a plethora of use cases. If you think about commerce, I mean, money is becoming digital. Cryptocurrencies obviously is a big part of it. But also in commerce, the good will travel, and there are all the logistic, insurance cases, whatever you can imagine around it. So in this moment, yes, is essential, I would say, for every company out there, understand what is working, what is not working, and then design a portfolio. We're in the early days. Of course, we want to see, what works and what doesn't work. But in this moment, a huge learning area for all of us.
Mm-hmm.
Yeah, I mean, at Adapar, we actually look quite a bit at blockchain. And mainly because of the kinds of data sets that we interact with the most often. So one of the use cases for blockchain is basically replacing what custodians and central clearinghouses do right now. So tokenization of assets and having a person's identity as well as information about what they own on a blockchain kind of disintermediates the current middlemen of custodians and clearinghouses, which is interesting because that's where Adapar gets all of its data. Whenever you buy a stock, it's being held in some vault by a custodian. If you could put that onto a blockchain, you wouldn't need that company, that building that just does that. And I mean, custodians are aware of this, and it affects sort of Adapar's business in the future in that, like, well, if data is on the blockchain and freely transparent and visible, that makes the problem of aggregating that data much easier and much more interesting because it's tied to a person's identity and they can actually truly own it. So thinking about long-term in terms of the way that financial transactions are stored and held and removing some of those middlemen was actually like pretty interesting. Also tokenization of some of the alternative assets. I mean, most alternative assets out right now it's very paperwork heavy, right? Buying a stock is easy. buying a piece of a private company, very difficult. Tokenization of that, I mean, I'm sure you guys heard of, I think it was Circle, purchased Seed Invest recently. There's a lot of interesting things happening on the alternative side in terms of tokenization, also making that data aggregation problem easier and really interesting. And then finally, I think, and Matt Harris mentioned this earlier today, or one of the talks did, cryptocurrency as an asset class. There's actually a lot of interest in people investing in it, the tokens themselves, and people have different opinions on that, but there's also a variety of ways to invest in that. And how do you track that? You know, there's this whole ecosystem of like financial intermediaries that are working on how do you create an asset class around this. So there's like now custodians, are, you know, people like, Itbit and Gemini are offering custodian services for custodying crypto assets. Like, what does that really mean? How are they the same as a current custodian? There's a whole world there of wrapping cryptocurrencies in sort of traditional financial instruments. That's also really interesting, and a lot of interest, especially from Adepar's client base, and how we think about how that's invested in, and again, the data that's aggregated to see your portfolio in one place.
So there's obviously been a lot of change in how our data has been used over the past 5 or 10 years. What do you think some of the biggest changes are going to be over the next 5 to 10 years? Like, what sort of changes do you see, and then what sort of benefits am I going to see as a consumer? What might be automated or known in the future that I have less to worry about?
Can I tell you a really cool story? Okay, so we have this one project. It's about insurance, and I know like nobody wants to talk about insurance, but so it's Maersk, which is the shipper, and EY Guard Time. And so what they did was they, you know, when you think about how a ship is insured, it's insured before it ever leaves the port, right? I mean, they do a bunch of checking and documents, and they do all this. Okay, give your insurance. And then the ship leaves the port, goes to the next port, and that insurance never changes. And when it arrives at the second port, it either is used or it's not used. But while the ship is in transit, there's all sorts of data that ship is collecting. They know the weather. They know the state of the containers. They have GPS read. They know exactly where the ship is, and all of those things can affect insurance, or they should affect insurance, right? I mean. But they don't today. And so part of what blockchain enables is feeding in is like combining the data at the same time. So if you could, and what this could allow in this case is behavior-based insurance. So you could actually have the insurance be offered at different times and to vary across the journey, which is really interesting. And right now it's impossible because the ship maintains one source of data, the insurer has a different source of data, and they are completely separate during this whole process.
Very interesting. You guys?
Yeah, a much more specific example of that's not as exciting as shipping is, so we offer account verification services for ACH transfers and for some of our FinTech partners. I think this theme of having more data that's coming in over time is probably one of the more kind of wonky data analytics things that's really cool, because for a lot of data aggregation, especially in finance, has been very point-to-point focused, right? Of like, give me all your data, I'll look at your portfolio allocation, you should have more bonds or whatever it is. And that's it. What we're seeing now is that, especially with the rise of more fintech applications that are thinking more about customer experience, more relationship over time, everything like that, is a smoothing out of friction of transactions over the life cycle of a customer, right? So one that is much less costly on an individual sense is ACH overdraft fees for fintech applications that are pulling money out of your account. If they overdraft you at the wrong time, you're going to get hit with a fee, and they don't like that, right? For us, specifically, how we remove friction there is if we give you this data stream about your customer, you can anticipate when you can actually draw money out of their account, so that there's no fee that goes in there, and you're not ruining your relationship that you've probably paid a decent amount of money to establish. So a smaller scale, but other customer insight focused improvement.
Yeah, and going a bit back to like the Adapar example, I mean, it's easy to collect data on your sort of public investments, like if you invested in stocks or ETFs or things like that. But as companies like Adapar and others and Quovo start bringing things right now that are dominated by paperwork into the digital age. So one example might be real estate. Companies like Opendoor or Adapar bringing in real estate information. You can now combine that with other types of data and actually really understand your financial picture in a way that you would never be able to do. Same thing with people's investments in various alternatives, but combining something, like real estate data with, Zillow and bringing in a bunch of information, you can actually know what your house is worth alongside all your stocks and everything like that. People just having a true picture of what their finances are, especially when people own all kinds of different things, that's happening. It's happening very quickly. It's super interesting.
Absolutely. And what I would add is there is a very powerful theme. I mean, we talk about insurance, insights, identity. The confluence of AI together with data processing massively at a scale in shorter time frames, that's such a value enabler. We can almost think about it as an equalizer of financial services, the degree of sophisticated financial services that can be accessible today to a small business, that they were only accessible before to a very large corporation, and getting that all the way down to an individual, that never would dream in having a private portfolio manager. And now through these kind of tools, we can make that available. That's incredibly empowering. So removing a lot of these inefficiencies, we talk about paper, but how taxing it is to have 3% or 4% of inefficiencies just because of the cost of moving money or credit or insurance from one place to another. And when we are talking in cross-border about countries that sometimes depend 20% or 30% of the GDP, in remittances, you really, create a huge amount of social value through the democratization of financial services. So that's also very exciting, and technically speaking, it's very exciting to see all this confluence of the models and AI coming to the data becoming lower latency, and all this brave new world of, cheaper services at a scale that provide a lot of value.
Yeah, I think one of my favorite things about covering fintech is just seeing how there's so many things changing in financial services these days, and a lot of it has been to the benefit of a consumer, right? There's more access to better products, there's lower costs for better products. And one thing that's come up a few times when I'm interviewing different companies is this concept of self-driving money. There's already a lot of companies out there that can help you, like, hey, you should think about consolidating this debt into one loan rather than having these credit cards or whatever it may be. But I haven't seen too much on like the savings side yet either, where maybe I direct deposit my paycheck from work into one account and it's like, hey, first of all, you should put more in your 401k at work since they match it. Next, you should put this in savings. You should put this into your fund that you're saving for a home. How long do you think it is until we see something that is giving us a better financial picture, since debt is obviously a massive problem in the US and other parts of the world?
I mean, yeah, just building what we were just talking about before. Part of it is like getting that data in one place. And that's starting to happen. And because data is starting to get in one place, and you're getting things like your savings account together from Quovo, as well as your investments from another place in one place, you now can start automating decision making that used to be held by a middleman who had to help you decide, put your money here, put your money here. AI and machine learning only work if they have clean, good data sets to work off of. And all the work around data aggregation that's happening is making that possible. And it just, the pace of that's just accelerating. Mm-hmm. So, and that's going to go in all sorts of places beyond checking accounts. I mean, the Adapar example is with people who have all different kinds of assets, but that's an area that robo-advisors haven't touched. But once you understand what kind of bonds someone owns, or cars, or real estate, robo-advisors become more intelligent. They start knowing, oh, you own a house, oh, and you have a loan, and you have these stocks over here, and you have this much in savings. That's a lot of interesting information that helps make smarter decisions that can be automated, which is just going to make everything more efficient over time.
Yeah, and I think a lot of that comes from the demand for those different types of services. So I'll give you an example of one that we've seen a lot of recently, and which is a very important topic for this country, is we've seen a lot of growth in student loan repayment apps of these programs doing exactly what you say, of trying to help people devise a strategy of how to pay off, using the data that we provide them around not just balances of how much debt you have, but the characteristics of it. What are the repayment schedules? What are the different clauses that are in there, and then forming a actively managed or AI-driven strategy around, hey, you should direct payments here to drive down the total interest repayment, or lower your balance faster, or whatever it might be. So that's one area that we're seeing a lot of, and there isn't like Nick said, there isn't a lot of data to feed those. So kind of before we saw that traction, and that's something that we've been building out to feed that, because there is this huge need for I don't know the statistics, so I'm not going to throw out the number, but there are a lot of students in this country that have that need to pay down that amount of debt, right? So they're asking for that data, and that demands transparency.
Alyssa?
Okay, I'm actually going to like change this example a little bit based on what you were talking about earlier, which gets to the issue of small and medium-sized enterprises. Because I mean, so we're talking about the consumer, but when you're actually talking about a business, one thing that small and medium-sized enterprises are terrible at is signaling their fitness to be financed, like just awful. So that's why they get rejected so often. So you hear about this global trade finance gap and how big it is and how it's mostly small and medium-sized enterprises. Well, I mean, the reason is if you go to a small and medium-sized enterprise or like a small enterprise in, say, like Vanuatu, and you're like, hey, tell me about your last 10 transactions. They're like, well, there was that guy maybe, and then the guy down the street, and it's like written on a piece of paper. No bank is going to accept that. And the cost of due diligence on that is way too high to make it worthwhile to like a Citibank, right? So the benefits of a lot of this digitization and a lot of blockchain and a lot of, actually, I think more broadly digitization and then the different ways of data aggregation is that now we can actually find different ways of signaling for the small and medium-sized enterprise whether they are fit to be financed. Like, hey, okay, your records suck. But okay, if you were on blockchain and you were doing, for example, transactions using this, well, then we have a history of that, and we have a history of who you were trading with. So suddenly they have a financial history as well. So it opens up this entire sector that people kind of forget about and don't really think about when you think about blockchain or digitization. Mm-hmm.
Yeah, it's interesting too. There's more and more companies looking at that kind of data sets. So recently, a company called iPrio was purchased by Market, and they manage like the cap tables when VCs or PE companies invest in private companies, but they're tracking the financial data of every single one of those transactions and providing the quarterly updates. There's now like an official audited financial record for companies that before, just in their internal accounting system, hopefully well kept together. Same thing with what Square is doing and Intuit. And there's a company called Blackline, really tying in everything from the inventory to point of purchase to the working capital all together in one system that's now visible and a real data set that you can actually make like lending decisions based on, just building on that. So a lot of interesting opportunities that are going to happen there, for sure.
Yeah.
And to your point about timing, that's also very hard to predict. But if I go back in memory, 100+ years ago, when mass production was invented, Ortega y Gasset will talk, a Spanish philosopher, about the revolution of the masses. So how the Ford Model T was going to bring transportation to the masses, and that commoditized product at a price point will actually change society. I don't know how our period in history will be called, 50 years from now, but basically we face now the revolution of the individual, because we are actually taking segmentation, understanding those small and medium businesses, understanding individuals. And the optimization that we need to produce now is very different optimizing financially a person depending on the preferences, on are they planners, or not, what are their financial goals, but technology is enabling that. It's enabling to do that individual optimization at a scale. So very exciting times. Moore's law is in. All predictions typically now today tend to be overbloated. I think that 3 years from now we will see much more segmented systems than what we see before. I think that will be safe to say.
Yeah. I do want to open up for questions too. There's 2 different mics in case anyone wants to go there. I have another one I'm going to ask in the meantime while you guys think of it or anything. But something I constantly think about is like, where will I do my banking, my savings, my financial health in the future? Is it going to be one of these startups that is out there? Is it going to be someone like an Amazon? Is it going to be still at one of the big banks? And I'd love your guys' thoughts on that, because I feel like there's a lot of different points of view on who that person actually will end up being. For a while, maybe we thought it would be Facebook, and then now maybe not so much, although they do have a blockchain team now from the guy that used to run PayPal. So maybe they'll figure their stuff out.
Good job, PayPal.
I don't know who wants to go first on this one, but like, where do you guys think you're going to do your banking in 5 or 10 years? Same place, or does it change?
It's interesting. I was speaking with one of the heads of one of the large Canadian banks, and they had a very strong opinion that, the traditional banks have a strong brand, and people trust the brand because it's been around 100 years, and that's why people put their money into the bank. And I was thinking a lot about that because, I personally will, without much thinking, will put my money into a Robinhood or a Venmo or a lot of these newer brands that, have been around maybe a year or two, and I'm very willing to trust them. And I never really reflected on that. I guess maybe we're waiting for like a Facebook-like scandal to occur. But I really think there's a lot of possibility for new upstarts to gain the trust of especially like younger generations. Like I don't think people think about their banking that much and probably don't switch around trying to find the best deal, but as new generations come up and they're like, oh, what's the product that's going to appeal to me? And they see something that's interesting and they trust it, they will grow with those new sets of brands. So I actually think there's a lot of potential there. Like another example, I think in Europe, there's I think they're called Sterling Bank, but because of the open finance rules in Europe, there's a lot of these new startup tech-forward banks.
Are these like the challenger banks out there?
Right? Yeah, those
The
kind
challengers,
of, yeah.
okay.
And they're app forward. They will bundle like insurance products and saving products all together, very API focused. Everything is integrated with other banks. As those new kinds of regulations forcing openness with data between banks happen, I think they're happening in Canada soon, there's going to be a lot more options, and I think a lot of the incumbents will be threatened based on consumer experience.
Mm-hmm. Yeah, I mean, one thing I think of is just like I use a bunch of these different products just to sort of like understand each one as part of my job, and SoFi Money is one of them. And something that, the only reason you really need to go to a bank branch anymore is to deposit money, but Amazon has a deal with 7-Eleven where you can go deposit cash into your Amazon account there, so why can't someone like SoFi set up a deal with the CVS, or even JP Morgan just make it so at the city ATMs you can deposit, or not the city ATMs, the Dwayne Reed ATMs, or whoever it may be, right? Like I feel like there's less and less need to have the traditional banking and more just it's sort of all wrapped together a little bit.
Yeah, and one other trend, but like another trend was that a lot of restaurants I go to now are credit card only. Mm-hmm. Like I think one of my favorite taco places, Dos Toros, I went in. They just went all over the place. They're like, sorry, no cash on premises, and credit card only. But I've seen that in many other places, like as payments become more digital, and that's sort of the best customer experience, like going into Whole Foods and you can scan your Amazon app and you make a purchase. It becomes less like, the bank becomes less and less important. Their brand becomes less important because it's more about, what you want to accomplish with the money rather than the mechanics of what you're doing there to begin with.
Mm-hmm.
Yeah, I think the answer to your question probably depends quite a lot actually where in the world you're asking it. In the U.S. or other countries that have pretty developed financial systems and very developed ecosystems, I feel like there's more of a move towards the middle of having existing brands like your top 4 or 5 banks who are trying to gain more digital capabilities to keep what they have, which is quite a lot of the assets in this country. And on the other side, those new brands, which millennials are much more attracted to, and they're perceived as being fluid, but are also moving to be more bank-like, right? So I think you end up somewhere in the middle, and at least in the U.S. Outside the U.S., I feel like you're probably going to run into more disintermediated solutions where people are engaging with a constellation of service providers that are the transparency is dictated by some technology solution like blockchain.
The thought that I would add is, in technology we have seen this cycle in which a new technology will force a redefinition of the business value chain. And typically you have 2 extremes. You have players that they will try to integrate everything into a vertical stack, like a walled garden. And that will come with a price. A lot of functionality, doesn't work anywhere, but this stack is here for you. And others will play more like we're the glue. We're going to be like an open ecosystem where people can adhere to it. And I go back to the late 90s where people were wondering if marketplaces or individual stores and what would be the solution. And here we are. We still have marketplaces and we still have individual stores. In a sense, the only incumbents that didn't make it were the ones that they didn't make a choice early on, and bet either for one or the other formula. So when it comes to financial services, I think some years from now, we'll still see a plurality of formulas out there. But time and time again, the open ecosystems, tend at the end of the day, to capture a lot of the momentum, and the closer ecosystems tend to become porous and tend to open. And there is that kind of convergence. So I do see the same thing, happening in financial services. Incumbents today specializing, leveraging the new technology that is being developed out there, and some of the integrated plays that we see today, recognizing, hey, we cannot do it all, at a scale, and we need to start becoming more, open. So, more to see in the years to come.
Totally. Alyssa?
Yeah, no, I mean, I agree with that. I think the one thing that banks have is banking licenses. So, I mean, to the extent that that's not changing. It's such a highly regulated sector, and if you're a consumer, I want to make sure that if I have a lot of money in a place, that it's regulated and somebody's paying attention to that. So I think while it's changing and it's diversifying, and you're certainly seeing all these new actors, there's always going to be, as you said, we're going to continue to see this mix going forward.
Got it. Any questions? Or I can't see the one mic. We're doing such a good job, they don't have any questions. But speaking of jobs, a lot of people thought that with the rise of fintech, it would take away a lot of jobs in finance, but it's actually created a lot as well. Where do you see, what are some of the best places, since we have some undergrads and grad students in the room, what are some of the best places to be looking for those jobs in the future? Where do you think they'll be?
At R3.
Blockchain. Talk to her afterwards.
Well, no, I think, sorry. No, I think, for students today, one of the most important things that we can do, that they can do, is to be technical, is to not be afraid of the technology, right? But look, we're building Corda, but we need people that understand business. We need people that, understand coding. We need people that understand economics. So I think, as long as you're comfortable with technology, then that puts you in a really, really good place to understand and be able to take advantage of all the new opportunities that are going to come. Because we don't know what they are, mostly blockchain, but maybe other things.
No bias, though.
Yeah, just to build on that, I mean, especially in New York, a lot of people have a lot of context from having worked in financial services. And a lot of the newer entrants or the newer startup companies, they might have access to great engineering talent, but there's also that element of connections in financial services, understanding the ecosystem, having empathy with the customers. Like Adapar, for example, is a business-to-business company. It's not a consumer brand, but we have to understand sort of the institutional financial world. And people who can really bridge the gap between having the context for empathy for those types of users, and then also having some technical literacy and can bring those two things together. I think that's like a really valuable area, and there's a lot of demand for those kind of people, especially in fintech around New York.
Yeah, I would just emphasize the same thing of it's really about bridging those two worlds of, data isn't really useful unless you understand the business case you're trying to solve, and having that understanding along the analytical skills to do that is really the best thing if you're looking for a job and trying to make a case for yourself. Being technical, it does not necessarily mean that you have to actually write code, but understanding the implications of code and the business logic behind something like blockchain and what that means for an industry, for a business, for something down to a consumer is probably the most important thing.
I could agree. Again, going back, I don't know how we will call this new digital renaissance, like 20 or 30 years from now. But I don't think that there has been a time in history that is more exciting to come out of college into a job. And the reason for that is that typically in the past, you would go to a place to learn. In this moment, the companies that you're going to join, they will look at you to learn from you, to learn the new things that are happening. Because the speed of rate of change is so important that it's actually in academia, it's actually, in the younger crowd that is incorporating into the labor force where the solutions are. And massively, every company from the marketing department, to accounting and everything in the middle depends in that transformation because consumers do want to be served in a different way. And those chains are being reinvented. And everybody that is serious about it is constantly looking at academia, new technologies, and the pool of talent that they need to incorporate. So, I think that you live in a very fortunate period of time.
Well, if I could actually add just one thing, I think what NYU is doing is actually pretty cool. So I know that there have been a couple of there's some fintech classes. I know there's blockchain class, but one of the things that we had a couple of our guys come here and talk to your class, I think, to a fintech class, and just kind of talk about Corda, what it was, what that meant, and I know my guys came back to me and they were like, wow, they did so much preparation. They actually asked questions, really important questions, which, and we go to different universities. It doesn't always happen, but yeah. So it was really impressive. So whatever you're doing at NYU, it's really good.
And they're hiring at R3 apparently. So. On that note, I think we only have a minute left, so I don't think I have time to ask any more questions. But thank you so much, you guys. I hope you found this conversation very helpful, and thank you guys for joining us.
Thank you.